stop scrolling for 1 second. Because if you are in crypto and you're losing money, it's probably not because the market is rigged. It's because you're making the same mistakes almost everyone makes. If you want to stop bleeding money every single day, stay until the end of this video. And yes, subscribe now, because what I'm about to explain is not hype, it's survival. Important disclaimer. This content is for informational purposes only and does not constitute financial or legal advice. Alright, let's get into it. Error number 1. Trading without a clear plan. This is the silent killer of crypto accounts. Most people open a trade with no real reason. No entry logic, no exit logic, no risk defined. They buy because the chart looks good. They sell because they feel nervous. And when the price moves against them, they freeze. A trading plan doesn't mean predicting the market. It means knowing what you will do before the market moves. Where do you enter? Where do you exit if you're wrong? Where do you take profit if you're right? If you don't answer these questions before clicking buy, you are not trading, you're reacting. And the market absolutely destroys reactive traders. Professionals don't win because they are always right. They win because when they're wrong, they already know what to do. Now let's move to the second mistake, and this one is incredibly common. Error number 2, risking too much on a single trade. This one feels exciting until it wipes you out. You see a perfect setup. You feel confident. You go all in or close to it. And then the market does what the market always does. It moves against you. 1 bad trade becomes a disaster. 2 bad trades and your account is emotionally damaged. 3 bad trades and you're revenge trading. Risk management is boring, and that's why it works. Professionals think in probabilities, not emotions. They know losses are part of the game. If 1 trade can destroy your account, your strategy is already broken. Crypto is not about winning big once. It's about surviving long enough to let consistency compound. And now we move to a mistake that looks harmless, but slowly drains your capital. Error number 3. Overtrading and forcing opportunities. This is where impatience costs you money. You feel like you must always be in a trade. If you're not trading, you feel like you're missing out. So you enter mediocre setups. You trade noise instead of structure. You confuse activity with progress. But the market doesn't pay you for being active. It pays you for being selective. Sometimes the best trade is no trade at all. Overtrading increases fees, increases stress, and lowers decision quality. The best traders spend more time waiting than trading, and if you can't sit on your hands, the market will gladly take your money while you stay busy. Let's continue, because now we move into the mistakes that don't just hurt your trades, they destroy your entire mindset. Error number 4, letting emotions control your trades. This is where most people lose money without even realizing it. Fear makes you sell too early. Greed makes you enter too late. Hope makes you hold losers forever. You see a red candle and panic. You see a green candle and chase. And the market loves emotional traders because emotional traders are predictable. Professional traders don't trade how they feel. They trade what the system says. If your decision changes based on your mood, you're not trading. You're gambling with charts. And yes, everyone feels emotions. The difference is who lets emotions drive the car and who locks them in the trunk. Now let's move to a mistake that looks smart, but is actually very dangerous. Error number 5, blindly following influencers and hype. If someone online says this coin will explode or last chance before 100x, ask yourself something very simple. Why would they tell millions of people? By the time a coin is everywhere, smart money is already exiting. Influencers don't get paid for accuracy, they get paid for attention. And when you buy because someone else told you to, you're not investing. You're providing exit liquidity. Information is power, but unverified information is poison. The market doesn't reward followers. It rewards independent thinking. Now here comes a mistake that keeps people poor for years. Error number 6, not learning from your losses. Losses are not the enemy. Repeated mistakes are. Most traders lose money, feel angry, and move on. No review, no journal, no analysis. That means the market teaches you a lesson, and you refuse to learn it. Every losing trade contains data. If you don't extract it, you paid for nothing. Experience without reflection is just expensive ignorance. And now we arrive at the final and most dangerous mistake of all. Error number 7. Believing crypto is a get-rich-quick game. This belief kills patience. It kills discipline. It kills accounts. Crypto can change lives, but not overnight. People see profit screenshots and forget the years of losses behind them. They want results without process, and the market punishes shortcuts brutally. The traders who survive are not the smartest. They are the most consistent. They manage risk. They respect time. They stay humble. Because crypto doesn't care about your dreams. It doesn't care about your bills. It doesn't care about your emotions. But if you avoid these 7 fatal errors, you stop losing money every single day. You stop reacting. You start thinking. If this video helped you, subscribe and comment which error hit you the hardest. Awareness is the first step to real improvement. And remember this: the goal is not to get rich fast. The goal is to stay alive long enough to win big. And here we arrive at the closure.